Ladies and gentlemen, good day and welcome to the JTL Industries Limited Q4 FY2024 earnings conference call hosted by Nuvama Wealth Management. As a reminder, all participants' line will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Sneha Talreja from Nuvama Wealth Management. Thank you and over to you, ma'am.
Thank you, Manuja. Good morning all. On behalf of Nuvama Wealth Management, we welcome you all to the JTL Industries Q4 FY2024 conference call. We are joined today by the senior management of JTL Industries, represented by Mr. Atul Garg, CFO, Mr. Pranav Singla, Whole-Time Director, Mr. Dhruv Singla, Whole-Time Director. We will now start with the opening remarks by the management, followed by the Q&A. I would now like to hand over the call to Mr. Pranav Singla for his brief opening remarks. Over to you, Pranav.
Thanks, Neha, and thanks to Nuvama for hosting the call. Good morning, everyone. Thank you for joining us today. I'm delighted to welcome you all to the JTL Industries conference call, where we will discuss the financial performance for the quarter 4 year ending financial 24 and for the whole year as well, which will overview of our current capacity expansion and recent acquisition as well. Before we delve into the details of our quarterly results, let me briefly introduce our company to those who may be less familiar. With 3 decades of experience, JTL Industries has transformed into a rapidly expanding company in steel tube manufacturing. Our product lines span various offerings from ERW black steel tubes to pre-galvanized and galvanized pipes, large diameter steel tubes and pipes, solar structures, and hollow sections. Our specialization lies in crafting VAP products, focusing on galvanized pipes, ensuring superior quality standards and impeccable finishing across our office. JTL operates 5 cutting-edge manufacturing facilities across India, located to secure raw materials at competitive rates and facilitate our expansion into global and domestic markets. These facilities consist of 3 plants in Punjab, 1 in Maharashtra, and 1 in Chhattisgarh, collectively capable of producing over 1 million tons as a whole. Recently, we acquired controlling stake of 67% in Nabha Steel and Metals, located in Mandi Govindgarh, Punjab. The acquisition provides JTL with ownership of an advanced steel product manufacturing facility. The newly acquired plant boasts a manufacturing capacity of 2 lakh tons and specializes in coil and long steel products such as billets. The strategic move enhances JTL's backward integration capacity, increasing coil production from 1.5 lakh tons at Raipur plant to 2.5 lakh tons and augmenting long product output by an additional lakh tons across Chhattisgarh and Punjab. JTL is set to enhance its production capacity in Maharashtra and Chhattisgarh through a substantial expansion initiative. The initial phase targets rise overall the capacity from 0.6 million tons to 1 million tons by incorporating DST and traditional forming technologies for manufacturing galvanizing steel tubes and pipes. This move will enhance plant capacity utilization and manufacturing efficiency and diversify our range of valued products to new geographical markets. Regarding our financial performance, JTL has achieved a remarkable milestone by attaining its highest ever sales volume, reaching unprecedented of around 3.4 lakh tons metric ton. This surpasses the sales volume of the previous year, which stood at 2.4 lakh tons, showcasing a robust growth of over 42%. Additionally, JTL experienced a significant raise in the sales of value-added products, with a 35% increase, climbing from 74,000 tons in FY23 to around 1 lakh tons in FY24. Our revenue grew 31% to 2,040 crore in FY24 compared to 1,550 crores in FY23. The company witnessed a significant uptick in revenue attributed to robust demand of products and strategic expansion initiatives undertaken during the year. On the profitability front, we remain committed to gradually increasing the same since EBITDA for the fiscal year was reported at 153 crores with the EBITDA margin which was healthy at 7.5%. The performance was supported by several critical factors including the increase of VAP share, overall scale of operations, and continuous focus on enhancing efficiencies across all our plants. Turning to our future-looking guidance, we anticipate a 35% growth in the revenue for FY25 compared to FY24, while maintaining a beta metric ton of 5,000 plus for the whole year. Our projected capex remains consistent with expectations for the upcoming period. Thank you for joining us today, and I look for an engaging discussion.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Nitish Dutt from Burman Capital. Please go ahead.
Hi, sir. Thanks for the opportunity. My first question is I want to understand what is your primary versus secondary mix. And also within secondary, are we manufacturing from patra re-rolling kind of material or sponge iron based HR slate HR coil?
Thank you for your question. So our capacity as a whole in a company is 50% for primary and secondary. So the output for the same for this year was in the same ratio as well. 50% of our sales this year was counted to primary market and 50% was to secondary market. And for making secondary products, we procure billets and re-roll them into narrow-width coils at a Raipur plant. So yes, that's patra, which is the same thing which you mentioned. And for a mandi operation, where we have a capacity of 2 lakh tons, we procure our secondary coils from the local players in the market as well. So that's how we operate our primary and secondary. And for primary, we procure material from JTL and Tata at our Dehradun plant and our Maharashtra plant, each having capacity of 1 lakh tons and 2 lakh tons each, respectively.
Got it. That's helpful, sir. Secondly, I want to understand over the last 2-3 years, has the secondary segment been a big driver of growth for us? Because the secondary prices had been lower than primary steel, and hence there was a market sort of tailwind because of low prices. And also, one of our large listed competitors has been claiming that the market is potentially shifting to primary because number one, consumers' preference for better quality, and second, as the new HRC capacities are coming up, the primary steel prices are expected to go down. So just want your perspective on both of these things, on how you see the market will move, if at all, and how you are prepared to handle that.
Yeah, to answer your question there has always been a primary and secondary market in the majority of the products in India, be it long products such as TMT and say I-beams, girders, channels. So there has always been a primary and secondary divide into the Indian market. As for the ERW pipe segment, it is more of the usages of the product and the gauge of the product which is available for a primary and a secondary option. So in the recent past, where a lighter gauge structure is required for, say, probably or steel gauge, lighter load-bearing structures such as carports, sheds, just a shed. So all these applications wherein a lighter gauge steel is required, which from a primary source of product becomes even more expensive with the deltas of thinner gauge. There is the main utility of the secondary product, and with the increase of usage of steel as regards to wood, direct replacement of wood, we've already seen an increase in demand of secondary product in the last few years. That's why we've grown, say, equally in both the segments. Yes, going forward, since we are expanding our product profile, we are going from earlier we used to do only pipes to 6 inches, and by last year we started up to 12 inches. Going forward, we're coming up with a DFT mill, which is essentially a 20-inch mill. So we are going towards a broader product profile wherein, yes, we have to use more of the primary products, so and for different user applications. But it's safe to say that there would be a good demand for the secondary products as well, due to the use case scenarios.
Got it. That's really clear. Just last questions on this. In the secondary segment, who is your core competitor, right? Are these smaller players, and hence you are able to take advantage of your bigger scale distribution, etc. And secondly, all the big players, right, at least on the primary side, are putting up huge capacities. So everyone is on the listed side, everyone is increasing capacities by at least 2 times over the next 3-4 years. And demand is not growing at 15-20% CAGR. It's likely growing at 8-10 or low teens CAGR, right? So do you see an overcapacity risk on both the primary and secondary side of the market?
In the secondary market, there are numerous players, and plenty of them are not in the listed space, and they are scattered across pan-India. So it's hard to name a specific person or a specific company. In the primary segment as well, the demand, maybe you forecast that it's in the lower teens because of the whole election scenario and the little demand slowdown. Otherwise, the market has been growing at a rate of 12-13%. And this is what we're expecting, or maybe higher, what we're expecting is going to happen post-election. And so there's no tailwind that we are expecting in the market, and it's a growing industry, and the use case scenarios are expanding as well, as Dhruv mentioned. So the industry for the primary, secondary, both is growing at a good 13-14%.
So basically, you expect that the incremental capacities that are coming up, for those capacities, there is enough demand in the market to absorb the incremental capacity.
See, when we are increasing our capacity in the market, we are not increasing the capacity in the product profile that we were doing previously, or the same product profile over and over again. So when we are going forward, we are focusing more on value-added products, which open up more space and more markets for us to venture into. For example, DFT will open up newer export markets for us, newer markets for structural applications, for multi-story buildings for us. So what we essentially are doing is not following the herd and just putting up capacities into the same black pipe manufacturing up to 3 inches or 4 inches, which is the lowest strata of the value chain of ERW pipes. So that is not what we are aiming for. We are aiming for increase in our product profile by increasing our size range and value-added products. So even if there is multiple capacities being installed in India, where there are only couple of players who are doing it in a value-added segment, rather than more of the players are going into the commercial grade pipes for volume increase.
Thank you. That's helpful. I'll come back in the queue. Thanks for it.
Thank you. The next question is from the line of Pradeep Rawat from Yogya Capital. Please go ahead.
Yeah, thank you for the opportunity. So my question is regarding the abnormal fixed asset turn that we generate right now. Can you shed some light on it?
Can you please repeat the question?
Yeah, my question is regarding the fixed asset turn. It's quite high right now as compared to industry peers. So can you shed some light on it?
Yeah, thanks Pradeep for your question. So our asset turn was extremely high because the mergers and acquisitions that the company has done in the recent past have been on a book value. Whatever applications the company has been doing in this year, if you will look at our gross block as well, which has increased from around 90 crores to around 150 crores. So this is getting our asset turn down to 14-15 from levels of 18-19 before. So this is a gradual shift which will happen over time, and as assets will sweat as well, you see the number coming properly as well. This year as well, we are expecting to deploy close to 120 crores on CapEx. So hence our gross block will come down, our asset turn will come down further to 12-13 numbers, which will be similar across industry. It's just that previously whatever asset purchase we did for the Mandi plant and the merger we did was on a book value. So hence the asset terms seem bigger right now.
Okay. So my second question is regarding that you have regarded that we will outgrow our competitors, like we can expand our market share from 9% to 25%. So can you, what gives you confidence to outgrow our competitors? What is our edge?
If you look at our numbers for the whole financial year, we've done a tremendous 40% growth over the last financial year. This has been done because we have been adding more SKUs and gathering more market share from our competitors. The forward-going approach would be that we'll be adding more SKUs itself as well and circulating the same products in the market. Plus, that we are a debt-free company. This gives us the encouragement and confidence to make the pricing comfortable according to us and playing with the margins as well. So hence, growing and expanding and increasing the VAP share is easy for us because of the debt-free status.
Okay. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of CA Garvit Goel from Invest Analysis Advisors. Please go ahead.
Hi, good morning. Am I audible?
Yes, sir.
Yes.
Yeah. My first question is on the industry side. Do you witnessing any kind of slowdown happening at the industry level due to these political events going on?
Thanks, Garvit, for your question. We don't see any slowdown in the industry because of the scenario what is happening. Obviously, this quarter we faced a little slowdown because there were no government demand as such. But apart from that, after the elections are over, we expect the demand to pick up again because the missions where we supply products, it's a basic demand for the country and this mission is bound to happen, JTL mission. No matter which government comes or how elections turn up, this is the kind of industry where we cater is very safe. And apart from that, we don't have our major sales happening towards this sector. Around 20% of our sales is towards government sector and the rest is towards dealers and exports. So we always prefer to maintain a healthy mix of supplies. So whenever there's a slowdown in one kind of industry, we can at least cater the other industry a little more.
And secondly, on your value-added mix, it is also improving in the terms of absolute numbers, but your value-added mix in terms of percentage terms is not getting improved. So what is the reason for that?
So if you understand to get the valued products into production, the first step is to increase the black pipe production. Because till time I won't have black pipes, I can't make galvanized pipes. So adding galvanized tanks is something that I've been doing every now and then in every quarter. But the major outflow would be happening when all my galvanizing tanks are commissioned. And going down the line, I'm adding GL line, color-coated line, DFT structures this year itself, in which as a whole, the VAP share should be increasing altogether.
Like you mentioned, this year we are targeting 5,000 tons of EBITDA. So what is exactly that is giving you the confidence to reach to that number, considering the kind of EBITDA per ton that we are currently doing?
So right now, the products that I'm offering is galvanized pipes and back pipes. Going down the line, when I'm talking about adding my VAP products, I'm adding products from GL line, color-coated line, and DFT. These products are valued from day one itself. So these products have a EBITDA per ton in the higher 7,000, 8,000. So once these products come to production and I start supplying them in the market, these products from day one are value added and will obviously show increase in the EBITDA per ton.
So are the products going to start contributing to the revenue from this quarter only or the upcoming quarter?
No, not this quarter. We should start expecting everything to be commissioned, talking about DFT in quarter 2, and from H2 you should start looking at the proper numbers. We'll obviously hit the trial phase of DFT in H1 itself, but the proper numbers and efficient manner would be visible from H2.
Understood. And are the people also, previous participant also asked about the incremental supplies taking over the demand. Is there any real fear of oversupply in this industry going ahead?
Can you please repeat the question? You were not audible properly.
Is there any kind of fear in terms of the oversupply of in this industry going ahead, considering the plans of your peers as well as plans of JTL industry?
As we mentioned before, that we venture into adding more SKUs every, when we're expanding, we are adding more SKUs. If we were just adding the same product, then it would be a fear for us. But as we are diversifying ourselves and adding more SKUs in every growth phase that we are conquering, so this fear is not anywhere close to us, and these products that we are adding are fully value-added from day one itself. So there is no fear as such that if we see a slowdown or there's oversupply in the industry for our products.
But you are saying these products are value-added, but value-added products are also manufactured by the peers as well. No? That is why I'm asking this question.
The DST products are not manufactured by a lot of players in India right now. We'll be essentially the second one in India to get this technology. So there's a lot of humongous demand for the product, which we'll be supplying. There are not many peers of us who do DST products.
Okay, fine. That's it from my side, sir. All the best for the future.
Thank you. The next question is from the line of Dhananjay from Ask Investment Management. Please go ahead.
Hi, congratulations for a good set of numbers. Just wanted to ask you a couple of questions. How much is the total capex we're doing for the next 2-3 years? And B, what is the update regarding the warrants and how are we looking in terms of the inflow of the warrant money?
Hi, Dhananjay. Thanks for your question. So the total outflow the company is expecting in capex this year is close to 150 crores plus. And if you talk about the next 3-4 years, we'll be spending close to 500 crores plus, 600 crores plus in the coming 2-3 years.
Okay.
Giving a an exact figure would be tough right now because it's a phase-wise manner enhancement.
Yeah.
And if you talk about the warrants, the promoters pitched in some money as well in the previous quarter. Around 170 crores is what 675 crores is what totally promoters signed up for, and out of that 170 crores is what we already received in the company as well. And the other warrants are due to the warrants that we did before are due in September. So we expect everything to come before that. Around 170-180 crores is something that we are expected to get from that.
Okay. Perfect. I've heard the remaining questions. Thank you so much.
Thank you. The next question is from the line of Aditya Velekar from Axis Securities. Please go ahead.
Thank you for this opportunity. Specific questions on capacity expansion plans. So in FY25, we assume 1 million ton to reach the target of 1 million ton. And then for FY26, how much capacity expansion you expect? And also, if you can outline the sales volume guidance for 25 and 26.
Thank you for your questions. So yes, we will be reaching the capacity mark of 1 million tons before the year ends. And the guidance that we mentioned for this year is a 30% upward shift over this year. And as our capacities keep coming up every now and then every quarter, we keep upgrading our guidance towards upward section as well, and try to do better as well. And if you talk about the guidance for the next year, we should be again doing a 30% growth minimum for the next 3-4 years.
Okay. And you have mentioned 600 crores capex in coming 2 years, right? If I heard you correctly.
It's 2-3 years, not to give an exact number, but around 2.5-3 years is something that we can expect everything to outflow in.
And your plan for 1 to 2 million ton expansion means that will be contingent upon the funds available, means raising of funds, right? And any color you want to throw on that? Are we on track for 1 to 2 million ton expansion, and by when you envisage that that will also flow through in the longer term?
Yes, there's no struggle that we're saying in expanding from million tons to 2 million tons. The company has been growing its margins and recently increasing its profit as well. So if you talk about the whole scenario, the promoters also helped them by putting in some money as well. So altogether, the company is a very comfortable cash situation right now for the future growth, and there's no stress as such we see for the coming months. So and as and when the company requires money, the promoters are flexible to put in the money that time as well. So there's no agenda that we have made that we'll be putting in money the last day or last something or the other. As and when the company requires money, the company has adequate money right now. But as and when the company will require money, maybe for advance to the suppliers or to order the advance of machinery, we keep putting the money from promoter side itself.
Okay. And with regards to demand, so in this first half of this fiscal, do we expect some softness in demand because of the elections and all, or you expect that the demand will pick up only from the second half? Any color on the demand pickup?
So we're expecting obviously the demand should pick up enormously by H2, but our H1 should be strong as well, and we should try and give new all-time high in every quarter.
Okay, fair enough. Thanks for this opportunity. Thank you.
Thank you. Ladies and gentlemen, in order to ensure the management is able to address questions from all the participants and the conference, please limit your questions to 2 per participants. If you have a follow-up questions, we will request you to rejoin the queue. The next question is from the line of Bhavin Pandey from Trust Plutos. Please go ahead.
Hi, congratulations, Pranav, on great set of numbers and the wonderful you guys had at JTL. First thing, so this acquisition of Nabha Steel sort of takes me back to the previous interaction we had where the key moat cited was the backward integration to the core that helps company sort of, generate economies of scale. So could you just shed light on this both economically as well as if you could quantify the effect of this acquisition, it would be of great help.
Thanks, Bhavin, for the question. So this acquisition of Nabha Steel will help us basically expand our margins. Right now in a Mandi plant, we procure around 1.5 lakh tons material, 1.2 lakh tons material from secondary players who are locally available and supply the product of secondary coil. Having the acquisition of Nabha Steel, we'll in-house make the coil itself, and this will be from scrap. So effectively, we should be like on a black side right now, if you're making close to 2,000 rupees, 1,500 rupees EBITDA per ton. So it should be at least 30% more saving on increase in the EBITDA per ton on the black side itself. So it is yet to start. It'll take a quarter or 2 or maybe 2 quarters as well right now for the final production from Nabha Steel to start because we're making some changes in the capacity right now. But once everything is set, you can see a significant increase in the bottom line.
Okay, that's wonderful. Secondly, Pranav, on inventory front, the days inventory in hand has declined. So any just sort of reason that could be attributed to it?
Can you please repeat the question?
Yeah. Inventory days have declined on a year basis for FY24. So any reason for that?
So basically, since we are not into the business of manufacturing steel, we are just converting steel. So we tend to make ourselves more leaner when the prices go down and material availability is robust. So and vice versa, when the material availability is not frequently available, then you have to stock up. So these are the reasons. Last year there was a good correction in prices, and we were able to also move out our finished goods on a timely basis. And that's how we also tended to increase a little bit in our market share. to have timely deliveries, increase in our product profile. So these are the reasons that we fared better on the inventory days as compared to the previous year.
Okay. And just one last thing on return ratios. Of course, they would not look as great as they were last year because of the expansion that's happening. But could you maybe shed some light on when we could see these numbers inching up in the positive direction?
So if you're talking about the ROCs and ROEs, so the 62 crores of amount is still in work in progress. And when these assets will come and start sweating, they will start generating the results. And this is a phase where we have raised capital for further growth, and hence there's a temporary blip which will eventually reach the 30s level in this coming year itself. And if you talk about the margins of the company, it's better to look at the company's performance on EBITDA per ton basis and not in percentage manner, because the percentage obviously keeps varying depending on the HRC prices. So the EBITDA per ton has been altogether in a healthy growth manner, and so we don't see any downfall which has happened except maybe the ROC, ROE.
Wonderful. That was really helpful, Pranav. Congratulations again, and good luck for the year ahead.
Thank you.
Thank you. The next question is from the line of CA Rajesh Mangal Agarwal from Rajesh Mangal and Company. Please go ahead.
Yeah, am I audible?
Yes, sir.
Yeah. Hello, thanks for the opportunity. I have just two questions. Why the Q2Q, quarter to quarter sales has been reduced near about 17% from 567 crore to 466 crore? And second one is, why the promoter shareholding is reducing? I am a retail investor.
Thanks, Rajesh, for your question. So the company's goal is to supply products in the market having a good margin as well. If you look at the numbers last quarter, we did 1 lakh tons of volume, and that quarter our VAP product share was low. Hence, the absolute EBITDA and the actual profit the company did is almost same to what we did this quarter. And so it really doesn't make a difference if basically it dies if you're playing that side or this side. So the focus of the company is to eventually increase its VAP share. And this will be happening in a phased manner every now and then quarter. In this quarter, we expect the volume should be good as well, again reaching a new all-time high with an increase in VAP share as well. So that's how we aim to get the market in the future. And if you talk about the shareholding of the promoters, the promoter shareholding has gone down because we've promoted some warrants, which has led to the decrease in shareholding. There has been no sell of stake from the promoter or any of the promoter entities. So the promoter are not selling at all. It is just some conversion of warrants which have been happening every now and then in the quarter, which decreases the shareholding. Now, if you talk about the situation now, we've issued the promoters warrants as well in December. So post that, our shareholding is supposed to go up. So it's just a phased manner in which maybe 1 2 quarters we keep seeing the shareholding is going down because of the warrants conversion from the public category. But eventually, when the promoters will convert their warrants, the shareholding should go back to 60s level.
Okay, thanks for the answer. And the last question is, why this ROC and ROE is reducing drastically? Near about 50% has been reduced as compared to last financial year.
So as I mentioned, around 65 crores is in work in progress for the advances of machines that we given. So when these assets come and when they will start sweating, they will generate results and give numbers as well. So it's just a temporary blip that it's visible. I think by H2 itself, by end of H1 itself, we should see the ROCs and ROCs going back to 30 level.
Thank you. That's very helpful. Thank you. Thanks for the opportunity.
Thank you. The next question is from the line of Pallav Agarwal from Antique Stock Broking. Please go ahead.
Yeah, good morning. Just a question, on the 1 million ton expansion plan. So, are there any concrete timelines as of now? By when can we expect production to start from that?
Thanks, Pallav, for your question. So we're expecting everything to be set up or commissioned by fourth quarter, and the same numbers should be evident in the next financial year fully.
Okay. And what about the additional one? I'm talking about the additional 1 million from 1 to 2 million ton. So,
all right. For the additional 1 to 2 million, the company's plan is to set up everything by FY27, and the same production for the entire will come by FY28. So by FY27 end, or maybe before, we're expecting everything to be set up across the Maharashtra plant. Obviously, it's going to happen in a phased manner. So every now and then, in every quarter, you should see the numbers flowing in because of some machines coming in. But the entire scenario of the whole 2 million tons should be evident post FY27.
Sure. Okay. And also, just on the EBITDA per ton metric, compared to peers, we have significantly done better in the fourth quarter. So are there any still old galvanized contracts under Jal Jeevan Mission still in place, or now those are out of the system, and this, we can probably maintain or increase the EBITDA per ton due to higher backward integration? Is that the scenario going ahead?
For the Jal Jeevan Mission, right now, since a new permit is under formulation and soon we will see it up and running, only after that, the full budget, when the full budget is declared, only after that the allotments will happen and new orders will come in. We only have a little bit of trickled orders from the last year, which are pending to be completed. But the full flow of all these projects will come in only after the full budget is declared. So after that, we can see a good rise in orders from these entities. But due to a recent correction in prices and market being stronger, we've seen a good demand in this month, and going forward, we see that there's going to be a good flow of material with the increase in range that we are coming up with. Also, the export market is doing better as compared to last year's performance due to increasing prices worldwide. So we see that most of the legs are covered, and since we are not stuck in a supply to one organization or one sector, we have the opportunity to increase supply in others. So yes, we see a good flow of materials right now.
Sure. So basically, our advantage in being present in both primary and secondary markets and backward integration is already showing up in the superior EBITDA per ton, and this should continue going ahead. So is that broadly, correct?
That's correct. It should further going down. It should further increase as well, as we mentioned, because of the acquisition of Nabha Steel, how the numbers will add up, and they will effectively not be evident in the top line, but they should be evident in the bottom line.
Sure. Yeah. Okay. Thank you for the answers.
Thank you. The next question is from the line of Darshil Pandya from Finterest Capital. Please go ahead.
Hello, sir. Good morning. So just wanted to understand, have you implemented the DFT technology which was supposed to be commissioned in Q1 FY25?
No, the DFT technology is talking to you is right on the way right now and being imported from China. It should be reaching the plant by this quarter or maybe beginning of the next quarter, and should be commissioned by end of H1.
So it's kind of delayed, if I am not wrong.
Yeah, it's been delayed by a month or two.
Okay. And what will be the capacity post this DFT technology is also commissioned? By the end of FY25, it should be 1 million, and before that, once this technology is commissioned?
So we are adding capacities in our Raipur plant as well, and our Maharashtra plant as well. So we are adding around 2 lakh tons of capacity, including DFT, in the Maharashtra plant, and similarly, we are adding capacity of 2 lakh tons in our Raipur plant as well. So altogether, we should have 1 million tons of capacity before the year ends.
Okay. Just want to understand, sir, as the guidance has been given of 30 to 35%, but if I'm not wrong, as we have done some acquisitions as well, and as this capacity numbers will be obviously live by next year. So just wanted to understand, is 30 to 35% achievable, or we can do more than that? Given this new acquisition is also done and EBITDA per ton, we are expecting some good uptake in this next year.
So the expansions the acquisition that we've done right now, it's for backward integration. So this won't be really evident in the top line or the volumes. The numbers that we are given of 30% growth is without accounting for all the expansion that we are doing this year itself as well. So as and when the machines come, we keep upgrading our guidance for the coming year itself. So it's a matter of time when the machines come, and we'll maybe upgrade our guidance.
Okay, got it. And this year, VAP product share was around 34.5%, right? And we are expecting 40%.
Yeah, this year our value to product share was around 30%. And going down the line, this year we expect to cross the 40% mark.
Got it. One last question, sir. As you know, Q4 we see some demand slowdown. How is this quarter been, like as on date as we speak today?
As of day today, we have been seeing very good demand from the export market as well. And we are very confident that we should achieve a new all-time high this quarter.
Got it. And export share, are we seeing this number to go still up, because we have seen some good uptake in the export numbers overall?
Yeah, we've counted
last quarter.
And we've accounted exports for this quarter, and then given the new targets, there's a good demand in the exports, but we know that the domestic market will recover now and then, maybe by end of this quarter or beginning of second quarter. So giving an exact number on how much percentage of exports we will do this year would be hard right now, because the domestic market itself is very strong.
All right. I'll get back in the queue. Thank you so much.
Thank you. The next question is from the line of Nikhil Agarwal from VT Capital. Please go ahead.
Good morning, sir, and thank you for the opportunity. Sir, I wanted to understand, how do you hedge yourself against the RM prices? Like in the last 1 month, about HRC prices have been on an uptrend. So how do we see our margins shaping up going forward just because of the RM price hike?
So to continue our production in a full manner, we do have to keep an inventory of about 12 to 15 days, but it really depends upon how we are shaped up against the back-to-back orders. To give you a broad overview, like currently we have two kinds of products, primary and secondary. In the primary market, we are procuring materials from JSW, Tata, SAIL, wherein we do have a monthly pricing with them. We are able to procure so much material from them that we are able to sell in a month. That is fairly covered from those entities. And in the secondary market, there is a daily pricing. So whatever the increase or decrease in the market there is, it's on a daily basis, and not even say a daily basis, on a hourly basis. So there we are able to hedge our raw materials on a back-to-back basis. So these are fairly the points that let us cover our raw material hedge. When we talk about a supply to our end user, say the government organization, we supply to a government entity, there is a price variation clause. Even if I do a pricing with them in the beginning of the year, the pricing that is applicable is on the basis of the month that the material is being supplied to them. And from the dealer network, it's on a monthly price basis, on a contract-to-contract price basis. So we are fairly covered on our purchase and sales in that manner. And exports as well, we have a fixed price basis wherein we are only occupying orders which we can complete in a time frame of 30 to 45 days, which does not allow us a lot of time for say have a effect of the increase or decrease in prices. So that's fairly how we work on these matters.
Okay. So to a fair extent, you can basically pass on the price escalations or the reductions to the end customers.
Yes.
Right.
Sure.
All right. And so reasons why your volumes fell down in Q4, like on a quarter-on-quarter basis, if you look at it that way?
So if you talk about the volumes for the fourth quarter, it's basically, as I mentioned, a dice which I can throw this side or that side. So if I'm just doing more volumes and not focusing on the main product that I want to increase my sales for in the future, which is value-added products, so then I'm actually eventually taking a hit on my margins. So like if you look at the whole numbers, like the numbers as a whole for quarter 4 versus quarter 3, they've just been the same in the bottom line and EBITDA, everything. And in fact, the EBITDA per ton has increased in a very good manner. So the company's goal is to not spoil the market, to have the margins increase the market share with proper distribution of these value products as well. So that's the company's approach. And this quarter itself, we have a new galvanizing tank which is being commissioned and starting up in Maharashtra and a Raipur plant. So after this commission, we'll be able to supply more black pipes and at the same time supply more galvanized pipes as well. Supplying black pipes and increasing the market share is not a problem for the company. Cutting up 200 rupees and selling black pipe is something that can be done overnight. But that's not the goal. It will eventually take a hit on the EBITDA as a whole. So hence we'll be having an approach in which every quarter we'll be increasing our VAT share as well and at the same time increasing the whole volume as well.
Okay, understood, sir. That's it from me. Thank you so much, sir.
Thank you. The next question is from the line of Virat Shah from Arihant Capital. Please go ahead.
Thank you for the opportunity, sir. I have a few questions. Firstly, regarding to the industry, if in per ton capacity, if you can tell me what is the industry capacity right now and the demand, let's say for FY24?
Thanks for your question. It's very hard to give a light on what the exact industry size, but we expect the industry would be close to 13-14 million tons. And there'll be various numerous players in that. And the projection for this year, we've already mentioned, we'll be going close to 4.5 lakh tons of volume this year going forward, which will be further upgraded when our different capex machines as and when come in the plants.
But this 4 lakh tons is something that we are adding. Industry-wise, if you could tell me how much capacity is coming in?
It'll be hard to tell exact number, how much capacities are coming in. There are few players who are adding capacities. So next to that, we know that around 1 million ton is something being added in our peers itself. But getting the number for the whole industry is something we can't really tell right now. And obviously, our goal is not just to increase the same products. Our goal is to increase our SKUs. So no matter what the industry is adding, our products are a little different from the others. We are adding more SKUs, which are replacement of wood and having ample uses and have a good demand in the export market as well. So being a star export house, we see a good demand in the export market for our product itself as well. What we will be manufacturing in the future with the capex. So that's all it.
Right, understood. So my next question is regarding the DFT capacity. So what is the current DFT capacity in the 6 lakh ton capacity that we have? And when we reach 1 million tons, so what that is by the end of FY25, how much of DFT will it have?
So we don't have a DFT capacity right now. And because whatever capacity that we have is up till 12 inches of pipe, this doesn't include DFT in any of the plants.
Going forward, we will, from a 1 million tons of capacity, we would be having about 2 lakh tons of capacity as DFT structures and 8 lakh tons as traditional pipe manufacturing.
Understood. So in the Raipur and Maharashtra, the two places that we are adding capacity to 2 lakhs each, so DFT will be added 1 lakh in each capacity?
By the end of this year, we are adding 1 lakh tons of capacity, DFT capacities in our Mangaon plant, and say by the early next year, we'll be adding another 1 lakh tons of DFT capacity in our Raipur plant. So that's what our plan going forward is.
Okay, understood. And there were some details that you mentioned on call. I just want to confirm this again with you because there was some disturbance on the line for me. Capex, you mentioned 150 to 200 crores. And in the warrants, out of 675 crores, only 170 have been paid up yet. So the remainder will be done by September.
No, so basically, out of 675, the last date is supposed to be, I think the money that we received was around in February. So the date for us to make the last payment is 1.5 years post February. So that's effectively August for next financial year. But promoters are not sticking to that. In fact, promoters will be putting in money every now and then after every, like maybe after X1 as well, and similarly after X2 as well. Basically, whenever the company requires money, we have the flexibility of putting the money that way. The remaining, the 2nd September, the date which I mentioned to you, was for the bonus certificate previously in the public category. It's the last date for those people. And the money of amounting to plus 170 crores is expected to come before that.
Understood. And EBITDA per ton, sir, you mentioned that we are expecting to reach 5,000 rupees per ton this year from 4,450 that we did in FY24?
Yes. So basically, tracking the EBITDA per ton every quarter is something that we can guarantee about, but obviously it should be in upscale manner. The company's number as a whole for the full financial year or maybe for the half yearly is something what one should compare with, because that's how the growth is visible. Like if you look at the company's numbers this year as well, for the full financial year, the company has done growth. Obviously, comparing quarter on quarter would be hard. So like last year as well, when we had extremely high EBITDA per ton, we mentioned it's a one-off case scenario. If you go back in the con-calls as well, we mentioned that there was a humongous inventory gain that happened because of the merger that took place because of our Raipur entity, because it was back integrated over there. So all things added up to increase the EBITDA per ton. But they were not sustainable without adding VAT products, which we have done now. So eventually we will reach a number greater than that as well. But this will eventually happen in an organic manner by increasing our VAT products.
Understood. And did you mention, sir, that the 30-35% growth that we are expecting, that is without the expansion? Is that the right thing that you said?
So right now, if I'm talking about, it is with expansion, obviously, because our DFT will come in as well this quarter, and our additional machineries at our Raipur and our Maharashtra plant will come in this quarter itself as well. So it does include expansion part as well. It's just that few products like galvanized pipes, we've already installed tanks for that in our plants, which will increase the VAP shares simultaneously.
Okay, and there's one final question. I'll just get back in the queue after this. We have almost 130 plus acres of land bank. So after 1 million tons, we are aiming to reach till 2 million tons of capacity. After reaching 1 million tons, sir, out of this 130 acres, how much will be required to add another 1 million tons?
So right now, if you talk about the area, so out of the whole 130 acre scenario, around 9,500 acres is what we have in our Maharashtra plant itself. In our Maharashtra plant, around 7-8 acres is covered right now. Going down the line to increase the capacity to 1 million tons, maybe another 10 acres would be covered at max. So post that, when I'm expanding to 2 million tons from 1 million tons, there will be anyway a lot of land still left. I won't be covering more than 40-50 acres going down the line again as well. So the land bank would be still left over there for further future expansions.
And I'll just put it this another way. So out of 130 acres, we'll be using up roughly 40 to 50 acres. And we'll still have 80 to 90 acres left even after reaching 2 million tons?
We'll be obviously developing the area and making some parts of it for storing some particular sizes of pipes as well. So giving exact number, how much area would be ample that time going down the line, it's hard to say right now.
Okay, understood. All the best, sir, for the future. I'll just get back in the queue. Thank you.
Thank you. The next question is from the line of Sanjeev Damani from SKD Consulting. Please go ahead.
Namaskar, sir. Am I audible?
Yes, sir.
So now my first question is regarding direct forming technology, which is used on the page number 3 of your media submission, where capacities are also mentioned. So I heard, a lot of disturbances were there in this conference but I heard that right now we do not have any DFT capacity. We are going to put them up. So can you elaborate what is direct forming technology, and can you also tell me that whether it will start from iron ore to finished formed products, or how it will work? Please, sir. Please reply.
Yeah, hi, Damani. The direct forming technology is the traditional way of making a square and rectangular structure from ERW pipes. It forming a round tube first and then converting into a square rectangular structure, which does not allow us to make heavier grade or higher grade steel structures from the traditional machines that we do, and is also a very tedious thing to do to make any non-standardized, standardized, or special products that are required by the engineering industry. So the DFT technology allows us to have the square and rectangular sections produced directly without converting into a round structure first. And to answer your question about what raw material we'll be using HR coils only for the production of DFT. It is not from the source of ore. We will be using the same raw material of HR coils, but a higher grade and a higher thickness will be allowed in the production of the DFT structures.
Okay. My second question is whether we manufacture seamless tubes or not.
We do not manufacture seamless tubes.
Okay. So all our products are welded only, right, sir?
Yes.
And the backward integration you talked about is 2 lakh metric ton because of the acquisition of Nabha Steel. So what exactly that Nabha Steel has facilities to manufacture? Can I know, sir?
So Nabha Steel is backward integrated. How is that we use narrow width coils for manufacturing of ERW pipes and tubes. Nabha Steel has a melting shop wherein we can melt scrap to form billets. The billets are then re-rolled to narrow width HR coils, which will be used for captive consumption.
Okay, sir. So are we running at full capacity of 2 lakh tons in Nabha now, or we are yet to build?
So we have just took over Nabha Steel. We are still in the process of upgrading and getting it under our nose for its full capacity utilization. After say a quarter's time, we would be having the full capacity of Nabha Steel running under our supervision.
So how much is the capex here, sir, in upgrading and refitting this unit?
So it's just, it was a running plant, but it is just certain minor upgradations and process flows and debottlenecking that we are doing. So there is no major changes that we are doing, and it is a new plant itself. So we are just reorienting it as per our needs. So that is what we are doing right now.
So to reconfirm, our capacity utilization will be 100% from next quarter from this plant.
No, we will not be having 100% utilization. The average utilization will be somewhere around 65 to 70% in this plant as well.
Okay. And in Raipur also 150,000 metric ton, we are putting up this kind of facility only, that is using scrap to make basic steel and then process it.
No, we are not doing that way. We buy billets from the market and then we roll them into.
Okay. So in Raipur you are going to have a rolling plant.
We already have a rolling plant.
Okay. Thank you, sir. I am satisfied, and all the best to you, sir. Please, I pray that our company progresses well. Thank you.
Thank you, sir. Thank you.
Thank you. Due to time constraint, that will be the last question. I will now like to hand the conference over to the management for closing comments. Over to you, sir.
Thanks to Mama for hosting the call, and thanks everybody for taking our time to attend the call as well and asking us all the questions possible. We like to give the guidance which is around 30% growth over this year for the next year. and at the same time working better with the margins as well because of the whole acquisitions that the company has planned out in such a way of backward integration and forward integration. Things should add up in a very good manner. And then after H1 itself, the numbers should be visible as well. Thank you, everybody, for joining. Thanks.
On behalf of Nuvama Wealth Management, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.